Okay, you can, sir.
Okay. Good day to one and all. This is Dr.Sivaraman of iknowindices.com. So I'll be presenting today the Asian session live market analysis along with the forecast. So we are into that of the new way of presenting the webinars from now on. So in this, you'll be able to see the live market analysis along with that of the forecast and also some trade recommendations. So for that, we will use the live market quote page as our tool. So as usual, I will give the derived forecast, followed by that one and all. This is Dr. Sivaraman of iknowindices.com. The recording is playing. So I'll be presenting today the Asian session live market analysis along with the forecast. Actually, I should not. Okay. So first of all, I'll give the derived forecast. Followed by that, I will do the market reading with the help of the live market quote page and do the live market analysis. So I wanted to present it this time in a different format so that it can give you to take appropriate trading strategies. Let me share the screen. Okay, first of all, we will see the derived forecast. It is today on 9th of October. I was supposed to give the webinar on 5th, but due to technical reason, I was not in a position to give the webinar. But anyhow, I can show the slide for you and explain to you how exactly the market has behaved during this particular week. And also what could be the possible moves today during that of the 3 sessions of today. Now, first of all, the derived forecast. You find that the market was really making big beginning false move on this as a slide for the on 5th of October. Then followed by that, we have seen that market started making the gaining moves. And after making several gaining moves in the market, and we have seen on Thursday for the DOE interest rate decision. Then after that of the announcement, we have come across the big slide in the market as envisaged. Then followed by that, yesterday during that of the US session for FOMC and also BOE governor's speech, they gained their levels again. Now today, 9th of October, the expected market moves are displayed here. They are expected to make the swing and firm up move during that of the Japanese session, followed by that of the swing and slide during that of the European session. And then again, they will try to gain the levels during that of the US session. So what is going to happen in the market is that more and more of uptrend could be seen in the market. So we could come across the market making further upward move during that of the second week of October. So I'll be coming again on 12th of October, Monday, and explain to you the expected market moves for the next week. So at the time, we will see in detail about the expected range and also the expected levels in which the currencies could gain to, etc. Now, as far as the expected lows and the highs which are estimated on Monday and how far the market has moved is being displayed here. Now, in the case of euro, it was expected to come down to 1.1150 and then start going up. And it came down to 1.1162 and started gaining the levels. And in the case of GBP, the expected low when there is extended stop and move on the downside. It was envisaged it could go to 1.5075, but it came down only to 1.5140, and then they started gaining the levels to 1.5372 and hovering around that of 1.5350 area now. They are likely to go up further. And in the case of yen, the expected low was 119.50, and they came down to 119.63, and an upward push is expected to happen. Not with So when euro and GBP are gaining the levels, they are unlikely to drop big in the case of USD. Yen, instead, they are expected to gain the levels. In order to gain the levels in the case of yen crosses. Then in the case of CHF, 0.97 was expected low. They came down to 96.52, and then they started gaining the levels. 97.68 is the high so far. They are likely to go up. Then in the case of USD CAD, 1.3075 was the expected low, but they came down to 1.2977, and then they went up to 1.3478 and then started making the slide. So they are likely to come down and hover around that of 1.29 area and start gaining the levels again, similar to that of the gains which are envisaged in the case of USDN and USD-CHF. So when euro and GBP are gaining the levels, USDN and USD-CHF are also expected to gain the levels. As a result, their respective crosses will also gain the levels. In the case of Australian dollar, they are expected to come down to 0.6950 area, but they came down only to 7043 on Monday and then started gaining the levels. 70 to 50 is the high. They went up to 70 to 77. They are likely to close around that of 73 area today. So market has moved in tandem in most of the cases, in line with the expectations. Now we will do the market reading with the help of the initial lows and the highs which are noted down. Now, in the case of euro, 1.1268 is the low which was recorded around 3:30 GMT, and the high was 1.1293. They are not breached the low or the high so far, if you refer to that of the live market code page. Then GBP 1.5263 is the low, which is not breached. 1.5374, that is yesterday's low, and 1.5372 was the high. They just breached the high by 2 pips. So you come across, in the case of euro, GBP as well as USD yen, the positive net change, which indicate very clearly that they are handling the yen crosses on the upside. Then in the case of CHF, 96.52 is the high, 96.76 is the high. They are not breached the low or the high. In the case of Canadian dollar, 1.2976 was the initial high. They came down and formed 1.2961. So as I was explaining to you, they will be hovering around that 1.29 area, consolidate here. Those who have taken the long positions during that of the week, they will induce them to liquidate the long by holding around that of 1.29. So 1.3021 is the high. They are not breached it. In the case of Australian dollar, 0.7248 is the high, 0.7277 is the high. Sorry, there is a low, and 7277 is the high. And they just breached the high, 7277, and gone to 7289, holding above. So which indicate that they wanted to make further firm up move today. And the forecast says that they are expected to firm up during that of the Japanese session, followed by that they are expected to make the slide during that of the European session, and then further upward move during that of the US session. So during that of the slide, if you make buy positions, we'll be able to realize a profit. The market is expected to be on the upside. And you know that the previous week, during that of the non-farm payroll, I was giving the webinar and I was telling you that for non-farm payroll, they are expected to gain the levels and suddenly drop the levels during that of the US session, and which will be a real surprise for the traders, and they could think that the market is going to be under the bear's grip. But subsequently, from this week, I was explaining that they are expected to gain more and more of levels. So here you find many of the analysts who have seen that when the non-farm payroll was negative, when Euro and GBP dropped, they immediately developed the sentiment that Euro and GBP could make for the downward move. But subsequently, the players have done the week beginning false move on Monday on the downside, and then subsequently they gained the levels. They gained the levels from that of the US session, and then continued to gain the levels from that of Tuesday and Wednesdays. So Thursday they made the slide during that of the European session and then started gaining the levels. Today again they're expected to make the slide during that of the European session and then firm up. So more on the upside, the market is expected to move. Now, if you've got any questions, you can ask me. I'll be willing to answer those questions which will appear in the window. And also, I will go to that of the next slide, which is going to be a different one from that of the earlier ones. So, I have been explaining many times the market reading and the forecast. So how exactly you can use the market reading and the forecast and develop the trading ideas. So here I want to just show you how exactly we can identify the trade for the session. So they are expected to make the swing and firm up move during that of the Japanese session, and then further firm up during that of the early European session and start making the slide. So in such a situation, what sort of trades we can think of? Now we will take Euro. I'll just do the market reading for Euro and give the recommended trade. In the case of Euro, 1.1268 and 1.1283 were the lows and the highs. So 1.1293. So they are holding. They are not breached the low and they are not breached the high, and the spread between the high and the low is less than 40 pips. So they may not gain the levels more in the case of Euro because the net change is only 9 pips. But in the case of GBP, the spread is more and also the net change is 22 pips positive. So they are likely to gain the levels. And you come across that yen crosses, they are also showing the positive net change. USD yen is showing a positive net change along with that of Euro and GBP. So yen crosses should also be gaining the levels. So here you come across that Euro yen is showing about 17 pips positive net change, and GBP yen is showing about 35 pips positive net change. So they are likely to gain further upward move as a contrarian move. So what trade we can think of? Euro, the spread is less, but still we can take a buy position to close with a nominal profit. So I can recommend a trade in the case of Euro, buy So a buy limit can be just about 5 pips below that of the current market level because the market is very subdued. So $1.1283, and the exit level will be about, they could make an upward stop in the high 1.1293. So the next level is a psychological level 1.13, and they will try to take away the stops above that of 1.13, And normally what they do is they do about 10 to 15 pips above that of the high, or up to a maximum of 23 pips. So above this, we can keep 20 pips. Above that of the high, 1.1293. Above that, 20 pips above, we can keep the limit order. So it will be 1.121313. That will be the exit. And we'll try to keep the stop or the hedge order 30 pips below. That will be 1.1253. Okay. So this is what the trade which is envisaged. You can try it in a demo trading account, and we will come to that of the GBP. The low is quite far away, but currently the market is holding, and they breached the high 1.5372, and by 2 pips and holding closer to that of the high. So a small dip from there we should be able to buy, and 1.5363 can take a buy. 1.5363 with the exit level. So they came up to 1.5374, and they are likely to gain about 20 to 23 pips. So they could go closer to the 1.54 and come down. So we'll try to keep on the safer side, 1.5390. They may go up to 92 or 95 and things like that. And we will keep the entry stop or the sell stop 1.5333. Okay. We are trying to take a buy on a small dip. So, they have come to 85. They could give a small fill. Then in the case of yen, we are not going to take any position. Instead, we can take the position in the case of euro yen, as they are making a contrarian move on the upside. They are likely to firm up USD yen to start with. Later on, they will firm up euro and GBP till that of the early European session, as they are showing the contrarian move. So 135.06 is the low. So we are at 135.42, 4042. Sorry. Some technical problem. So I'll just note down here euro yen 135.42 will straight buy market. And in the case of yen, euro yen, when they gain the levels in the case of euro as well as GBP, the high is 135.4344. They are likely to gain up to 75 to 80 pips. Normally, when the spread is more than 70 pips, if we take quickly, we'll be able to book profit. But since it is only about 35 to 37 pips spread between the high and the low, but we are aiming a smaller profit. So the profit level from here, they could gain up to 40 pips. Normally above that of the high, they go up to 43 pips. So we'll add 40 pips to that of the high. So 135.84. we'll keep the limit, and also we'll try to keep the hedge order 50 pips below that of the entry. As in the case of crosses, the spread is more, or the spread is more between the bid and the ask. So, and also because of lower volume, the players could make quick downward stop, and so it is better to keep 50 pips hedge order. So that will be 134.88. So these are all the three trades I just recommend. And you can also try to take in Euro, GBP, Yen also. They are likely to gain the levels, but already they have gained the levels about 42 pips. You can keep the buy limit. Or we will take up Australian dollar, because Aussie, they just breached the initial high 72. 77, and they are holding above. So 72.77 they are holding above. So we'll try to keep 72.82, just 1 pip below a buy limit. So that they could give a fill, and you know that exit could be above that of the psychological level 0.73, and 0.7289 is a high. 11 pips is there, another 12 pips they can gain. So 73.12 they could go to. So we will keep the limit exit as 0.7309, just 2-3 pips short of it, so that we will get a definite fill, because some platform they may not show the exact levels, and sometimes the highs and the lows might differ from the other market levels. So exit will be 73.09, and the hedge order will be 30 pips below. 0.7252. Okay. So these are all the trades I just thought I can recommend based on our studies, and you can find out how exactly the trades go. Try it in a demo trading platform. I will also give every Monday and Friday some suggested trades, and you can just follow it and understand how the trading can be done in the market. Now, meanwhile, if you've got questions, you can ask me the questions. I request Adinda to put it on the group chat, because I am not able to keep the other page open. Otherwise, I have to close my mic and keep the other chat open, I suppose. There are questions, you can ask me the questions, otherwise I'll go to the next slide. Now, hereafter, we are going to have the Asian Sessional Live Market Analysis and Forecast webinars, on Mondays and Fridays. Instead of Thursday, I intend to give it on Mondays and Fridays, so that Monday I'll give the forecast for the entire week. Then Friday I will try to review the forecast. Then besides, I may not get an appropriate slot to present the Tracking the Forex Market Together webinar. So instead, I thought that I can give the quick updates for about 15 minutes or 20 minutes as a live show, and that I will try to give it only to select a quick trade from that of the market as an opportunity trade. So that will be under the heading current market condition and opportunity trade. Current market condition and opportunity trade. And that will be a quick trade to gain the maximum out of the market move. Say, for example, before that of any event, they are going to make an upward spike or a downward spike. Then I will try to identify that and give it as a quick update. And that will be displayed 30 minutes before that of the commencement of the webinar or the quick update. And you have to look for it in the home page of the FX And then once you come across that, you can just log in and find out what opportunity trade I am recommending. I'll be only giving brief live market analysis in the comment, and give the appropriate trade in the respective currencies. And that will be able to really give you spike trade opportunities. So I thought that this can be of more help for small traders, and when the trade recommendations are more safe and apt, then they will be able to practice in their demo account. And later on, once they understand how exactly the trades are to be done, then they can go to the live trading account. So now coming to the recommended trade. Okay, there are questions now. Shall we take Australian dollar at market now? Okay, as far as Australian dollar is concerned, 72.83. Now 82, they should fill it, I suppose. For 83, you can take it. Absolutely no problem. Because 77 is the high, they are holding it above that, and we kept the hedge order 72.52. And they are unlikely to come down during this session. Only by late US session, European session, they are expected to come down. Before that, you should be able to quickly book profit after keeping stop at entry. Keep always in mind, once the position makes about 15-20 pips profit, keep stop at entry, and then try to close it with a trailing stop, or manually close it by end of the session or start of the early session by watching it. And in between you come across the gap time, then you should be able to understand the gap time moves and do it. The best thing is close it by end of the session. So Japanese session closes by 7:30 GMT. Exactly by 7:30 GMT you close it. Sorry, 7 GMT. 7 GMT you close the position, so that it will be very safe and the profit will be assured. Then you can think of a next trade during the European session. Then can you please display the trade? Yeah, I'm just displaying the trade slide. I think you are able to see that. I think which is getting more popularity with regard to the trades. So that is what I thought, that the traders might be more interested to find out how exactly the trading decisions are to be taken. Any other question, please? And the market in the month of October is going to be upward. Keep it in mind. I've been telling all along, right from the last week webinars, that the market is going to be on the uptrend. Even though the traders develop the bearish feel, but the players are going to make upward move. But intraday downward moves will be there, like the European session swing and slide. So what you can do is buy during the early session. Actually, during the early part of the Japanese session, we would have taken a buy. We'll be in the profit and we can keep stop at entry. And then subsequently, by end of the session, we can close it, swing and firm up. And then swing and slide they will do. Sorry. And for that, you don't do a sell and buy trade, because if you fail to book profit, your session they will make a rise. Then you might find it difficult to close it. So in line with that of the long-term trend in this week, you try to take the trades. So when they are making a slide, wait for the low to be formed, and once the low is set and not breached for 30 minutes, you take a buy. Then you can book profit when they make the rise next time. If you trade in line with that of the long-term expectations, as far as this week and the month are concerned, you'll find the trading will be much easier. Then Will T. Good evening, doctor. When the statistically derived range for the example Euro 1.10, 1.1450 is breached to the upside or the downside, how should we handle? Any upside, we can take a sell. Any downside, we can take a buy, because again they will revisit this range unless and otherwise they come to that of the extended stop and move. Only then shift in trading zone will happen. Till such time, if they breach below or go above, below that you can take a buy, above that you can take a sell, and they will be able to show you the profit. Ultimately, we need to get profit out of the market trades. Then how should we handle for the trades outside the range? So in the event, if you are struck on the wrong side, suppose you are taken a sell in the case of Euro at 1.1350, they shoot it up and gone to 1.14. And obviously we have the hedge order to limit the risk. So 30 pips, any level we enter, we have 30 pips hedge order to limit the risk. And so once it is hedged and the hedging is making profit, and it will be in a position to book profit on the hedge. And then when they come back again, you can book profit in the buy side, in the sell side. Otherwise, you simply close the sell and book profit on the buy side. Whichever way you want, you can handle it. If you have more patience and if you think that they are not done the extended downward stop and so they will revisit the range again, then book profit on the buy side, then take another sell and close both the sells below the average. So you have various trading strategies depending upon the equity available for you. You should not overtrade. You can definitely do such strategic trades. And Michael, thank you, Dr. Sivaraman. Good to have you here. Thank you. Okay. Do you feel it will be upward in October in all the majors? Yes, it will be an upward move in the case of Euro, GBP, and Australian dollar. That will be visible. But anybody will think that when Euro, GBP, and Australian dollar gain, it will be reflecting on the USD weakening move. But the players are going to gain the levels in the case of USD, USD CHF, and USD CAD. And when it sudden drop in them, in tandem with that of the knee-jerk reaction in the rise of Euro and GBP, we just grab it and use the hedge order to limit the risk. And subsequently, they will gain the levels in the denominator currencies also. So that is that trick they want you to play this time for the year end. So keep that in mind. If there are any other questions, then I'm willing to answer those questions. So if you got any suggestion that how exactly I can present it or what sort of information you need it from me, you can give it in the form of a feedback so that I will try to incorporate and try to present it during the webinars. So based on certain feedback, I thought of the quick update trades for 15 minutes as a live show. So it will also be presented in FX Street under the YouTube video system. And I will recommend at that time current market condition. What is a false move? The players are doing it. That is current market condition. So when they make a downward false move, we know that they will spike up after that of the data release. So we will try to grab buy position and see that they make an upward spike and book profit easily. That sort of trades I'll be recommending. So I will not be able to fix the time now, and it will be displayed 30 minutes or 1 hour before that of the prime data release. So you can frequently check the home page in FX Street and you will see the update. And it will be also recorded, and the recorded one will also be available in the home page. That is what FX Street has informed me. So that once you click, you will be able to see the recommended trade there. And if you are not missed, you can still continue to try that opportunity trade. Then later on, I'll ask for the feedback, how the trades are really helping you or it is misguiding you. You can tell me openly. Any other question, please? Okay, if there are no questions, then I'll try to wind up by showing the forecast for today. Okay, thank you for the recommended trades. Thank you. Okay, now today is 9th of October. Swing and firm up move during that of the Japanese session. That is what we are trying to take the buy position to close around 7 GMT or maximum before that of 8 GMT, so that they will be able to firm up and quickly book profit. Then later on, they will try to slowly hold high and build a sell position and suddenly drop to induce the higher level long holders to liquidate the long position before making the rise for the US session. That is, for weekend, they are going to induce short covering. So don't hold short till such time, then you might be caught in doing the short covering. So avoid doing distressed trades. Avoid getting trapped in the market. That is why I'm giving the forecast and also the market trading for you, so that you'll be able to really understand how such recommended trades you can take it, and they are all with a specified time frame. So this recommended trade is meant for the Japanese session and maximum to that of the start of the European session, not more than that. Then you could get trapped. So in my forecast, you will come across both the levels to enter and exit and also the time frame. If you follow it carefully and also use the trading strategy of hedging to limit the risk, you should be able to really consistently earn money from that other market. So I'll come back on Monday and give the forecast for the next week. And also in the forthcoming weeks, I'll be giving Mondays and Fridays the Asian session live market analysis and forecast webinar. So thank you one and all. So it's a great pleasure to present the webinars using the YouTube video, and you are able to see me. Probably the photos what you have seen in the FX trade about me, it was taken about 15 16 years back. So I'm old, so you should be able to understand that. And old is gold. That's what you should be able to reconcile. So see you and wish you all happy trading. See you on Monday.